Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 21st, 2016. I wanted to take a look at the trade ideas on the site. I do have gotten behind on quite a bit of these as far as updating these. By updating that, I mean there are quite a few in here that have either hit their final profit target or exceeded their maximum suggested stop and therefore need to be moved from the active swing trades category. That's what we're looking at here. If I click on this tab, which I've done, it will list all swing trades, both long and short. Now, of course, you can go in and short by, by long trades or short trades. But these are all the active swing trades we're looking at now. I'm not going to get into the growth and income trades. That's a category, a separate category, but it's not necessarily mutually exclusive. Some of those trades in growth and income and long-term trades can also be swing trades, and they often are. So time permitting, I'll get to those, but probably do those updates separately. There's only a few in there anyway. All right, let's start out. We'll go in order here, and I'm going to move this screen over to another monitor. There's a chart of the VIX already up. I'll just point this out. I'll probably cover this in a market update. But this is the VIX. This is a 10-year weekly chart. And what these shaded boxes show right here are the low ends of the ranges. And you can see from 2007 all the way up to about mid-2012, this was a range where the VIX would either hit the top of that range, sometimes come all the way down within the bottom of that range, but usually it didn't stay there very long and you had a spike. And as most of you know, when the VIX spikes, that means that tends to mean the market's going down. Falling VIX means the market's rising. And just want to point out that since mid-2012, or really if I move that over, it'd be more accurate. Let's try to grab that box, move that over here a little bit if I can. There we go. So it looks to be about, since late 2012. You can see this is now the bottom range of the VIX where it usually stops right at the top of that range. Occasionally you'll have a thrust down into the bottom of the range like you did here, and those readings are very fleeting. We had a handful there, maybe a couple months where we stayed down around the low end of the range, and then that was followed by a big surge in the VIX. We had a single reading right here in mid-2015 down to the low end of the range, and then the biggest spike that we've had in the VIX throughout the entire bull market, going from down around the $11 level all the way up here to about the $54 level or so. And I just want to point out we are now once again at that level at the bottom of the range there. So that again I'll cover a little bit more in a market update. Let's get into the trade ideas here. Starting with first one up is ACBFF, and again I'm not going in any particular order, just we'll go down alphabetically here. ACBFF. Okay, here's a daily chart of ACBFF. This is a case of one that was both a swing trade and a long-term trade. We had several swing trades. We swing traded down here off the bottom out of the break of this bullish continuation pattern, but that was also where the original long-term trade entry is. And a long-term trade is simply an investment or a trade that you plan to hold for usually 6 months or more, sometimes years, and that's still the case with ACBFF. So at this point, the last update was made right here as it was approaching. It came up so fast at that point in time. I had tentatively placed a final target at $3, updated it, got up into the 290s, and at that point I raised the stops to protect profits. The trade was up about 340% from the entry, and stops were raised. I'm checking the other board. Any move below $1.42, and again, those are suggested stops. Depends on where you bought it, if you've scaled in, if you've cycled in and out. And so far we're getting close to that level, but we haven't gotten there yet. Now, most importantly, the stock is at support. If I change this line, let's put that line, make it green. You can see this level here, which is at 151, roughly 151. It acted as support back here. We had a brief breakdown, came back up, and we've been testing that level quite a bit. It's an objective level to add exposure, but it's also something to watch because if it breaks, there's not a lot of support really all the way. We have a little bit down here, support zone, that's around the 125 level, and the real support comes in around $1. That's where the stock needs to remain above, and I think it will. If it gets down there, that would be another objective area to add on or to take a new position. But right now, I'm not crazy about the indicators. We had that divergent high right there as it approached the $3 level, and both the MACD and the RSI are pointing lower right now, and we're not all the way down to the oversold level yet. We really got extremely overbought on this stock, so there's some possible steam to let out of the stock, maybe a little bit more, but I do like it here. I think it's held that level for a while, and I do believe that's an objective area to add on with the stop not too far below. Again, depends on your trading plan with this one. Longer term, I think there's still a lot of potential in the cannabis sector, but there's been profit taking since the elections, and so let's just keep an eye on that one. I'll leave those stops in place right now for any move below 142. Okay, next up is ATVI Activision. This was a short of the break of a bearish rising wedge, just like this bearish rising wedge before it. The stock has a history of melting off pretty quickly once it breaks down, and it did the same thing here. So we have already hit back in, looks like early December, we hit the second target for 22% gain on that one. And as often is the case, this one's had a reaction. A reaction is a pause and or pause, a bounce, consolidation, any of the above, and that's what's happened so far. We had a couple, it's hit it once again, so it's had plenty of opportunities to book profits there if that was your final target. But I'd still favor a move down to at least this T3 level, and I'll show you why. Not only is it really nice support, you can see the reactions here, 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 but when we look at the weekly chart, this is a long-term trend line. You see the divergent high, bearish rising wedge pattern, the breakdown, just like back here, no different. We had a 27% drop back then, but most importantly is the fact that this primary uptrend line is very well defined. And what I often say is these trend lines, primary uptrend lines, when prices get really extended and well off the trend line, you always have it, they come back in and visit the trend line ultimately. And once they get close to that uptrend line, it tends to act as a magnet, and you're almost assured to hit it. Now right here, this was just this is a weekly candle. In fact, we dropped down, but we closed back up there. So this wasn't a downtrend. These are downtrends here. And you can see these downtrends. Each and every time the stock was in a clear downtrend, so far, it did visit this trend line that starts back here. And so my expectation is for a little more downside at the very least. Now this trend line could break any day now. This is a very extended trend line. It goes all the way back from late 2012, early 2013. But that you can zoom in there and see that there's still about another, to move that line there, about another 7% downside to that trend line's hit. So we flip back to the daily chart, and we can see here that it roughly correlates with that target there. I have it at 33.54, which would actually be right about here. Yeah, so you can see, this is a support level on the daily chart, but I always set the targets on short trades above the actual support level, and that's right at about that 7% drop. So that aligns perfectly with both price support here on the daily chart as well as that weekly trend line. So that's why I'm favoring more downside, and the next sell signal, although I don't think it's an objective entry at this point. This wouldn't be still listed, and if it is, I'll remove it from the short setups because most of the meat has already been taken off the bone on this trade, and the stock is somewhat in no man's land. So if you're already short, no problem, lowering your stops to protect profits, but that would be very likely. I'll revise that to the final target and eliminate this target unless things get really ugly in the market in the next few weeks here. Next one up is AVGO, Broadcom. Trying to recall, I'm not looking at the notes right now. It's just a series of divergent highs and corrections. I've gone over this chart quite a bit, and it continues to wedge up. We're still below the stop of 186. Getting close, but we're not there yet, and it still looks just as good as it did when we entered the trade. You can see this long-standing negative divergence on both the MACD and the RSI. We need to see this wedge, these two white lines break down, and then this is the primary uptrend line. That one goes back quite a ways. You can see here, this is that yellow uptrend line off the 2013 lows. And when that goes, there's a potential for a lot more downside in Broadcom. We look at a weekly chart. Here's that same downtrend line, or uptrend line, and you can see very powerful negative divergence. Here was a divergent high back at this point in time in 2014, and it might not look like much. I use log scaling on these charts, but that was about a 23% drop right there. And that was a very small divergent. This is a much larger, very clear negative divergent high after an extended uptrend. And this looks like a stock that is much closer to a top than anything else. In other words, I'm not looking for just a correction. If you really want to give this one some room, at minimum, from a long-term point of view, I see this one headed down to the 116.65 level. Try to quantify that for you, if I can get that away from here. That would be a drop of about 30, almost 35% or so. So that's a VGO Broadcom. BBBY, Bed Bath & Beyond. This was updated in a static post yesterday. We took an entry, it broke out. This was a trading range down here, or a basing pattern, I should say. We had, over that 46.71 level. We broke out. So far, the story in this one had a breakout, came back down below there, which doesn't completely foil the pattern. Now, ideally, you want to see on a back test of that former breakout level, you want to see the stock hold, but sometimes they do run it down below the breakout point, which they did here. So in the update yesterday, I highlighted this pretty well-defined uptrend line. We were right there, and even mentioned that would be an objective area to add back or initiate a long position with a stop not too far below. So far, it's held it. You can see the stock's bouncing today. Not a very impulsive bounce, but that's support. And then when we looked at the 60-minute chart, I posted this one as well. We had the early entry. This was a pennant type triangle pattern here the stock broke out of. So what I did, I extended the downtrend lines, the downtrend line up top and this uptrend line. They intersect, and we came in perfectly right there. See that red candle right on those two. And so far we've found support, continue to find support on the 60-minute time frame on this uptrend line there. After the breakout, there was a divergent high on the 60-minute chart, and that's what's probably caused this pullback here. So the healthy case, bullish case would be if this stock can hold support here and continue to move higher, especially if it takes out that previous reaction high. And if it goes much below there, I'll leave whatever the official stops are. I'd have to reference the post. I'm not looking at it now. But there's another support level there. And you really want to see it kind of hold in this area. If it goes much lower than that, it's not going to be good. And we'll probably have taken the stop out. I think the stop might be at 45 if I'm not mistaken on that one. KRE, this one, CARA, KRE Therapeutics, has been a unofficial trade several times in the trading room, going all the way to back here. I think we had this basing pattern breakout. I've traded this one long and short. It was an official trade somewhere in here with a stop, I think, below $6. Now, this red candle here, just before earnings, they announced, I believe this was an earnings date right here, and there was a last-minute dump that took the stock just barely above that $6 level. So for consistency, I'm going to stop this one out. I've left it on there like a lot of these. Personally, still own this one. This is a long-term trade for me. And from that point, there was a little washout move. Again, a little overreaction, just selling down into the close right before the earnings announcement. But everything was positive from there. So from that washout move, the stock rallied over 100%. It was about 116%. And the pattern that I've been highlighting is this symmetrical triangle pattern with these white trend lines. And so we had a breakout. Fell a little, hit that $11 price target, fell a little shy of that $13.35 target, came back in. We've had two back tests right there and right there so far. Ideally, from this point, after the second back test, I'd really like to see this stock continue to move up. I don't want to see another back test. Whether it does or not, there is support right around here where that last back test occurred. There's some support around 860, we'll call it. So to be safe, stop, I think, under that 860 level makes sense, especially on a 60-minute or daily close, because that, problem with downtrend lines is because the slope is negative, they come in at lower and lower levels over time. So you don't want to see this one continue to backtest for the next 2 or 3 months, because that'll ultimately take the stock down, depending on where it comes in, $8 or lower. So either way, it looks good for now, but really need to see it come up. And now what I want to see to be bullish on this stock, the bullish level is about $9.90, $9.91 or so. You can see quite a bit. If I shade it here, that seems to be capping the stock lately. In fact, there were quite a few reactions around that level. So this is what I'm looking at, and that line again was around 991. You call it $10 if you want to be safe. So if it can take that out, it should have no problem punching up to 11, and then ultimately to that maybe that 1335 target above, and over time, quite possibly the 1810 level. CCE, this is Coca-Cola Enterprises, the European subsidiary. Long-term trade growth. It's a growth and income trade as well as a swing trade. It pays a dividend. Nothing great, but at least that's a healthy dividend for a near zero interest rate environment, 2.21%. And so you're getting paid to wait. Just a great chart. Not much to say. This is long-term support down here, the $30 level. We had that hammer. Again, this trade was discussed in detail, so you can reference the trade. But it looks good. Positive divergence so far after that very bullish doji there. We've moved up which is what you want to see. There's still a lot of targets. The stops are listed again. You can reference the trade on all the notes on the site. There's that long-term support level at 30. You can see reactions from below, reactions from below. Finally broke above, back tested that level to help validate it, and that's where we fall into now. Bullish divergence on the weekly chart, just as we had negative divergence at the high. So that one looks good for a bottoming play, as long as it's not stopped out. And degas. Now I used a lot of the different symbols if you go into the active trades, because there's many different ways to trade natural gas. You can use NG, the E-mini futures. You can use UGAS, which is a 3-time long. This is my preference. And again, I say I like to short these, especially if the trade might last for more than a few days. And the reason I've cited this many times, especially in the trading room, if I grab these highs up here where UGAS started trading back in 2015 or so, from the lows, even to where we're at today, let's not even go down the lows, it's lost 94% in value. Natural gas has not lost 94% in value. This is due to decay. This is why I prefer to short. If I want to go short natural gas, I'll short the 3-time bullish leveraged ETF versus buying the 3-time bearish one. And if you need extra proof, you just look at DGAS. Here's where it came out way back when. And that thing is down 50%. So you're almost guaranteed to lose money over time on a lot of these very volatile ones, especially if you can just tuck them away. So there's UGAS, and the latest on it was really focusing on the 60-minute charts. We had this ascending price channel breakdown. We hit that first potential target. There was the first official target hit. And this is that level I mentioned on the natural gas futures where we had support, as well as on UGAS. I mentioned this line right here at $33. And we hit that, flirted around it yesterday. We've had a counter trend bounce, but I expect that to probably fade no more than probably no higher than this former support, now resistance level. And I still think we see a move down to 31.44. In fact, if you take a look at a 2-hour chart, you can see how well defined that level is a support. So it looks like a magnet. A lot of reactions down around this level, gaps, reactions. So I still maintain this target of 31.44 on UGAS. FRO, this is Frontline. This is a shipper. This one, trying to recall, we added it somewhere back here. We hit the first target in one day. In fact, in 1 hour, we hit that first target for an 8. I think it was about a 4. I'm looking at the other screen now, a 4.2% gain. So we already hit the first target, pulled back, and it did go on to exceed. This red line here was a suggested stop. But for those of you still in it, this is the level I'm watching. And I still have a small position in this one. You can see this uptrend line right here off the lows, quite a few reactions so far. That's the support level to watch. So far you have a breakout of a bullish falling wedge pattern, the downtrend line here, breakout, a back test, and the stock is still above the lows, and it's above this downtrend line. If it breaks that downtrend line, especially that low back in September, that would be quite bearish. But as of now, this one still has the potential to rally back up here and hit that next target, or any of these targets overhead. But officially this one's taken out the stop, so I'll remove that as soon as possible. So you have trade was either successful if you were only going for T1, or stopped out if you were going for T2. All right, next up would be IPI. This one needs to be taken out. removed. This was a trade that had these targets back here, T1, T2 at 249, and if I recall, I'd have to check the notes on it. It was stopped out somewhere around here, and then what it did, it back tested. Here's the primary downtrend line. So we had a breakout, back tested it for a while, and then took off and went on to hit that second target. Pretty nice run from the back test. It was up there, from lows to highs, almost a 200% run on that one. But again, that one will be removed as soon as I get a chance here. ISRG, here's one that hit the final target. It's still listed as active, but it hit the final target of 612.35 on, looks like December 7th. And I can't recall, the short entry was somewhere up here, probably within that right around that break of the bearish rising wedge pattern, maybe that second downtrend line, one of the two. So it's hit both price target. This was only a potential third target. And if you're still in this one, that looks like a likely long-term target if you're willing to ride out the counter trend bounces. You can also see it here on a weekly chart, nice uptrend line. But this is a key level to watch right here, the $600 level. And the stock's at 632 right now. So let's see if that aligns. No, that third target would be below there around 560. Okay, next up, this is KRE. KRE was based on the 60-minute chart. It was a short entry at 53.02 to be exact, with a very relatively tight stop over 54. So about a 1-point loss on that one. And it was short in anticipation of a breakdown of this rising wedge, which didn't occur until later. So the price, KRE, the regional banking ETF, went up a little bit, then went on to break down, had an impulsive breakdown on the wedge. And as I mentioned the other day, if you didn't catch it, this chart almost mirrors IWM. IWM is very top heavy in the regional bank stocks, and also has a rising wedge, which it broke down from. Unlike the broad market, it's not going up. It's just been trading sideways since. So really the level to watch if you're either in this one or looking for a position is this support level. That line is at, let's see, 54.40. That's defined, that's been a pretty well-defined support level since this wedge breakdown. And a move down below there will probably bring that one to any of these targets. Actually, I should revise. There's a first target here, support level around 52.57, and then any of these other targets are possible. MO, this is Altria Group, active trade. Twice it's come within 1% of the first target, which is at 60.28. So you can see very close. Remember, the targets are set above the actual support level. Support's at 60.20. First target's at 60.28, so we've come within 1%, still below the stop comfortably. Now, this chart looks like it may have run its course when you look at that, especially with that bounce since the wedge breakdown and back test that you can see right here. Here's your rising wedge, negative divergence, back test, and then the stock moved down. However, bigger picture, this one looks to have more downside. This is a weekly chart. You can see the pretty clear negative divergence in place on the weekly chart. You see this primary uptrend line, which really forms a rising wedge. I had listed it here as a wedge overthrow, that little pop. So this one looks like it's just coming in and back testing right now. We had one back test, and it looks like we're about to have another back test. And over time, I can see this one easily moving down to that 56.40-ish level or so. But as of now, we'll just leave it on. That's the thing about trades. You can second guess them all day long. Best to just set your limit orders to sell or close a position or cover in this case, and a stop loss order. If it takes it out, let it go. No biggie. Next one up is Mosaic. Now, Mosaic, I believe, was stopped out. Quite a few. I had a lot of ag stocks. These are long-term growth and income trades. They paid dividends, and what happened is, these I've left on. These are great personally. These are long-term positions. They pay pretty healthy dividends. This one's paying about a 4% dividend yield. And the story here is this one's been basing around for all year, really, 2016, in this basing pattern here. And at the time, this was the bottom of the basing pattern. You can see, so I had a stop below 23.70. That was taken out, but then the stock rallied up to the top of the range, briefly broke out, fell back in. Being that it's been in that range for the entire year, what happens is your cost basis is reduced, and I should have reduced the position, the stop, to reflect the dividends. In other words, you're collecting a dividend, which therefore reduces your cost basis on the stop, so you then should you can reduce your stop. But I didn't do it. So either way, I'll remove that one. But I wanted to mention that it looks good from this perspective if and when it can make a solid breakout above the top of this trading range. And you can see it there on the weekly chart. There's that basing pattern or trading range. Now it is flirting above long-term support. We have a reaction low back here in 2008, and that's where it caught support here in early 2016. So that is really the do or die level. It needs to hold that level there, which is about $22. And but it's, again, looking at this chart, looking at these recent overbought readings, I think this one is more likely to move up in the coming months than down. That was Mosaic. I already covered natural gas. Let's see, potash. Moves right in line with Mosaic, another fertilizer stock. And same story. You can see the range throughout 2016. This one had even a tighter stop run. I think the stop was at 1540 and just barely clipped that. In fact, I don't know if that was on a closing basis or not. I'll have to look that up. But we had a couple pierces through there right at the bottom, and then it moved back up to the top of the range. And a lot like Mosaic, we recently had a little fake out breakout off the top of the range, and we've fallen back into the range. But again, this one's paying a nice dividend yield of about 2.24%, and longer term looks good, especially if it can take out the top of that range. Then it'll most likely head up there to that 2220 target. Okay, this is SEDG, still listed in the active trade category, although it was stopped out. This one was entered at, there was a bullish falling wedge, not this one. I modified this wedge line slightly. It was starting to break out, and I'm looking at the notes on another page here. The entry was at 1687 with a stop below 1660, so very tight stop. So the loss on that was minor. And what it's done, it's continued to work its way down here. So one to watch. That's why I'm going over it in the video today. Not to mention it's still listed. I'll move that over to the completed trade category and may revisit this as a new long side breakout. Again, nice bullish falling wedge pattern. As you can see, we need to take out this downtrend line. If I don't already have it, I will, wrong line, I will set a price alert and try to highlight this one if it breaks out. But you can see the bullish divergence in place below the wedge. Let's take a look at the weekly chart real quick. Now the stock doesn't have a lot of trading history. It looks like it just started trading in early 2015, so you don't see much on the weekly chart. Okay, a couple more to go here. This is STNG, Scorpio Tankers, a shipper. This one was a long entry on that breakout there, which proved to be a false breakout. We had a stop. I think the entry was around 458 with a stop under 425. So that was taken out. But what happened, it came back in. Here's an uptrend line to watch. And it held support on that uptrend line. Came back within the wedge, the larger wedge. I'm referring to this downtrend line and this line here, and has since broken back out. And what this one's doing, these were resistance levels. It's really bouncing up against, it's finding resistance right around that 460 to 470 level. And you can go back in time and see a lot of reactions there. This is what defines that level. So this one could really run on a break above 470, especially on volume. Like any other breakout, you want to see it confirmed on volume. And there's a positive divergence not shown on the daily chart here. Let's mark that up. So you have a bullish falling wedge with a divergent low, but this one just needs that catalyst to break above 470 again on above average volume. And really there's not a whole lot. There's some minor resistance there around the $5 level, but 534 looks like the first target, with a potential second target up here around 645, and possibly a move over time up to 755. Okay, this is Taiwan Semi. Would have been a short somewhere here around the break of the bearish rising wedge. Breakdown back test was playing out. Looks like, did we already hit that first target? Let's see, 28.23. And so far at that point, if I can grab that candle, we came down as low as 28.34. No, we missed it by just a hair so far. But it still looks to be playing out. You had the divergent high. There's your stop up here around at 31.90. And longer term, this one, here's the picture. This is the primary uptrend line off the 2008 lows. It's already been broken down. We back tested, regained it briefly, but this is the line we're watching right now, this minor uptrend line. And if that goes, if and when that goes, which this chart certainly indicates it will. You can see the divergent high. That one would probably bring it all the way down here to at least, these are long-term targets, 1963. And the stock's at around 21 now, so that's good for about a 33% drop. If it goes to that next target, 1684, that's about a 44% drop. So again, that trend line, and here's that same, this would be that uptrend line that we're looking at on the weekly chart here on the daily basis. So really, if T2 gets hit, you have intersecting support, you have a horizontal support there, as well as that uptrend line support. So you quite likely get a reaction there. But so that's where you may want to cover everything. But otherwise, if and when that level goes, quite a bit of downside in the coming months for TSM. All right, just a couple more here. We covered all the natural gas ones. Let's see, WB. WB has already hit the second target twice. That second target is 42.25. Hit it back here in November, and we're at that target again, a little bit below it now. Or we were today, bounced back above it, but T3 remains the final target for now. If things get really ugly, there's some potential to move all the way down here to that 2044 area, but as of now, T3 at 3482 remains the final target. And last one, second to last one up, we have Yelp. I believe this is a completed trade. Yeah, Yelp already hit the final target, T2 at 3312. Okay, I was referencing the notes, and it looks like that was the short trade. Yeah, that was the final target. Hit it for 20% gain. Looks like we reversed it to a long right after that, and that was based off the 60-minute chart. On a break of this bullish falling wedge pattern there. So that was the first target, potential second target, which was already hit. And if I recall correctly, I had a very tight stop on that one. It may have triggered the official stop. I have to check the notes. Let's see. T1, possibly target about it. Suggested stop below 3260. 3260. Yeah, we did. It went right below that level, back tested the wedge at a slightly lower level, and then played out to go on and hit those targets. So that one will be moved over to the completed trade category. But from there, if you gave it just a little more room, that had a very tight stop. That second target was about a 14% gain, and that was right on top of a 20% gain on the short trade. So that one was really reversed right at the lows. Okay, last one up. This is YHOO. YHOO was shorted somewhere up here, I guess on the trend line break or the back test of this rising wedge pattern. There was a support level that was broken. It's come very close the last few days. The first target set at 38.13. I'll have to reference the notes, see where the entry was, somewhere up here. So that one's already good for roughly a 13% gain, but we're 1, 2, 3, 4. Look at 4 consecutive candlesticks, 38.13, which is just above that actual support level there. 38.13, about right here. So we're coming really within basis points so far of that target. And it still looks good over time. Let's look at the weekly chart. Yeah, there's a primary uptrend line, rising wedge pattern, a breakdown. So I think this one over time looks to be going down to at least this area here, 3285-ish. That's another 15% downside on YHOO. But as of now, we'll just leave those targets where they are, T1 at 38.13 and T2 at 35.85. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.